Hey everyone, and welcome. So today we're going to cut through all the noise, all the hype, and get right to the heart of a simple question. What is Bitcoin really? We're going to break down how it works, why it even exists, and what it all means, sticking to the original ideas and the hard data. Okay, so to really get Bitcoin, you have to start with the problem it was trying to fix. And there's no better place to look than this quote from the original white paper by its mysterious creator, Satoshi Nakamoto. And the keyword here, the whole reason for Bitcoin's existence, is trust. You see, every single time you buy something online, you're relying on a middleman, a bank, a credit card company. Satoshi saw this as the system's biggest weakness. So here's our game plan. First, we'll unpack that whole problem of trust. Then we'll dive into the technology that solves it, the digital ledger. After that, we'll see how code itself can create scarcity, how that turns into a totally new kind of asset, and finally, we'll zoom out and look at the big picture. All right, let's jump in. Section 1, a system without trust. We have to understand the world Bitcoin was born into, this world of middlemen, to really appreciate what it's trying to do. This slide really lays it all out, the old way versus the new way. On the left, that's the system we all know. You've got these separate, powerful institutions for everything. Central banks controlling the money supply, commercial banks holding your money, and payment companies moving it around. But then look to the right. That's Bitcoin's radical idea. One single, sprawling network that does all three of those jobs by itself, with no one in charge. So you're probably thinking, if there's no one in charge, how on earth does anything get done? How does it not just fall into chaos? Well, that brings us to the nuts and bolts. Section 2, the digital ledger. The core technology here is something called the blockchain. And honestly, the easiest way to picture it is just as a giant public notebook. Every single transaction is a new line in this book. And here's the kicker. Copies of this book are held on thousands of computers all over the world. So everyone can see it, but nobody can go back and secretly change an entry. It's totally public and totally permanent. Okay, so let's follow a single transaction to see how this works. It's not like swiping a credit card. First, you send your transaction out to the whole network. Then, thousands of computers called nodes all check it to make sure it's legit. After that, a group of super powerful computers, the miners, basically compete to bundle up a bunch of these verified transactions into a block. Whoever wins that race gets to add their block to the chain, and just like that, those transactions are locked in forever. But wait, how do we trust the miners? What stops them from cheating? Well, this is the secret sauce. It's a concept called proof of work. To win that race to add a block, miners have to solve a ridiculously hard math problem. And solving it takes a ton of computer power and real-world electricity. By proving they spent those resources, that they did the work, they earn the network's trust. It's what makes the whole thing secure without needing a boss. So why would anyone in their right mind spend all that money on computers and electricity? Well, it's pretty simple. They get paid. When a miner wins and adds a block, they get a reward of brand new, freshly created Bitcoin, plus all the little transaction fees from that block. That reward is the incentive, the fuel that powers the entire security of the network. Okay, so we've got the tech down. We know how the network runs. Now let's switch gears and talk about the what. Bitcoin, the asset, with a lowercase b. This is where code itself creates real-world value. You see, Bitcoin, the asset, has a bunch of properties that make it act a lot like a digital commodity. People call it digital gold for a reason. It's a bearer asset, which is a fancy way of saying if you hold the keys, you own it, just like cash in your hand. It's scarce, you can divide it into tiny pieces, and you can send it anywhere in the world in minutes. And crucially, anyone can prove that it's real. And this is a huge deal. Unlike regular currencies where a committee can decide to print more money whenever they want, Bitcoin's rules are set in stone. They're written right into the software. The schedule of when new Bitcoin are created is completely predictable and transparent, and it's practically impossible to change. And that brings us to the magic number, the absolute foundation of Bitcoin's value. There will only ever be 21 million Bitcoin. That's it. It's not a goal, it's not a policy, it is a mathematical limit baked into the system from day one. This verifiable absolute scarcity is what gives it its power. So when you have this totally new thing with these unique properties, it starts to make people in the financial world look at it differently. Which brings us to our next section, a new kind of asset, and how it's starting to find its place. Think about it. Bitcoin's price isn't tied to a company's earnings report or a country's economic growth. It moves based on its own unique factors. Things like how many people are using it, how secure the network is, and overall market sentiment. And because it dances to the beat of its own drum, it behaves very differently from stocks and bonds. And you don't have to take my word for it. The data is pretty clear. Just look at this table. It shows how Bitcoin's price moves in relation to all the big asset classes. Stocks, bonds, gold, you name it. The correlation is incredibly low. And in the world of investing, finding something that zigs when everything else zags, well, that's the holy grail of diversification. So where is all of this heading? What's the end game? For our last section, let's zoom all the way out and look at the big picture. Because Bitcoin could be more than just an asset. It could be a new kind of institution. So what is the grand vision? Well, it's pretty ambitious. Some see it as a future global settlement system for moving huge amounts of value around the world. Others see it as a way to protect your wealth, a form of property that's really hard for anyone to take away from you. And of course, there's the digital gold idea, a store of value for the internet age or even a hedge against problems in our traditional money systems. And just in case you think this is all some niche, futuristic fantasy, take a look at this. This chart puts things in perspective. The amount of Bitcoin traded every single day is right up there with the trading volume of massive household name companies. The market for this is already huge and very, very real. At the end of the day, Bitcoin wasn't just some clever invention. It was a breakthrough. It was the bellwether. It kicked the door open for an entirely new universe of digital assets and proved to the world that a global decentralized monetary network could actually work. Which leaves us with one final big idea to chew on. Is Bitcoin just another investment, another line in a portfolio? Or is it something much bigger? Is it maybe a bet? A call option on the small chance of a future with a completely new kind of money, global, digital, and belonging to no one and everyone all at once? That's the question. Thanks for tuning in.